Okay, quick Monday morning radar update. So we've gapped up this morning following the US. Small caps are above the range. Just that efficient markets drifting back into that gap fill area, and we'll see where they want to take it through the lunch session, after the lunch session I would say. But stocks are moving well today. Quick look. A few of the metals. Even oil's up today. So we've drifted into deeper areas on these on the commodities, down towards the rising 200 day I would say, or getting close. It doesn't mean the bottom's in, but a deeper pullback in those. Let's quickly have a look at what else has been moving. We'll just recall our opinion. I have no position in Bitcoin, but our opinion on Bitcoin was, and you can compare this a little bit with that first hard reset on best of the best. You know, the deep pullback. Sometimes it turns into basing action. Sometimes it trades a pretty strong swing move. Best of the best traded another swing move before it rolled over. So this is probably one of the better tips I can say to anyone who likes to buy markets what are falling out of the sky. When you see a big range bar like that, step aside, don't do anything. But when you see it test that large bar and then trade a swing day above it, well, look for this to hold. And anyone who knows my setups at Trading Basis, the swing point, the swing kicker, active low, higher high, anything like that, you know, they've all give you a slingshot into a potential sort of hold there. Doesn't mean it won't roll over and die. It does mean that there's easily a break-even stop or close trailed on something like that. So that is a 50% move up. Let me just see where it is from the swing day. 45% up from the swing day. So in Bitcoin. If you want to know how we talked about that, it's in these videos. It's probably tagged in Bitcoin as well. So it's a little tip, you know, and think about that around gaps as well. Not only wide range bars, gaps as well. So when you get a pro gap, potential pro gap, common consensus is that it should hold. It shouldn't go below that bar. In reality, the better thing to see is the little test and the reversal off it. The test of that bar, or at least wait for a swing bar to post. So this morning's off-piste is wide range bars and swing bars. Let's move on. I'm going to go straight into the volume leaders today. The sun is out. I'm in a happy mood this week. Let's see what's in these. I'm going to get some. I'm going to walk away from the screens after this, and it is 10 past 10. We should have traded 25% to be on average volume. I will say it again. We're going to see a few stocks I hold in these, and you know, I always say you chase your die. Some of them will have been trending for some time. I'm holding on for dear life until the trend ends. So do not follow any ideas blindly. Use them to work on a methodology and work on that reward to risk scenario, and you know, the key to making money in the markets: big winners, small losers. See how other people do it. It's not about magic entries. It's about getting good reward to risk entries. So let's buzz through these, and then we'll move over to the small caps. So DTY, this is a recovery. It's coming to the potential sort of baseline there. It wouldn't be high on a growth screen. It doesn't sort of fit what I trade towards, but I do see the zone of interest. VLX, I hold a position. Now, you know, I start recounting after this breaking trend here, and that was a huge breaking trend, 50% haircut on the market crash. And, you know, I didn't get involved back here. I got involved later. So I have a position. I probably got involved here, and I did add to it here. Looks crazy, huh? Well, you know, guess what? They don't all look. It's not about. it's not about where they go in the short term. It's about how big your winners are, how big your losers are, and how you position size for it. So the trend is intact. It's on volume today. We'll see if that one can break out if the market has a good run. I'd like to think that the stock should be stronger than the market as well. It's not always the case. If it was the case, always the case, I would be sat on a beach in Hawaii. KWS, big long sideways base. Moving on. MOTR, deep pullback. UPGS. So same. You know, it's been running for some time. If it turned out to be an outlier, it wouldn't be late stage. You know, this is kind of last chance saloon area where anyone interested in this stock would be sort of, who uses my sort of methodology, will be looking at it. In reality, you know, I've had so many chances to buy this thing through my setups. I chose not to. I'm in different stocks. I know some of you are in this one. The trend is intact and it looks fine. I'm in this one. It's now up from the base break. Pretty solid amount now for us. Tries to line up the you know, plus 75% out of the base. Added to it already. You know, I've got a full position, quite a tight base actually, so I've got a full position early without much work, and it's turning into a good trade. We will see. High lows, high highs. Trend is up. If you want to know about that one, there's a video on YouTube. I've noticed a lot of my links don't work on my sort of tweet for some reason on the website. The website's changed something, I think. So I'll have to update those. Not that I do much promoting. It is now 17 minutes past. We should have traded 26% to be on average volume. Would be about 39 to be on conviction. Is that right? Let's have a look through these. In order of sector again. SRC, obviously I have a position, do your own research and all that. You know, this is one what we've been riding for some time. I took my position, I added to the trade, bought, added here I think. So it's another of those deep breaks in trend, we start counting again. It's not really base since it came out of this big sort of huge loose stage 1 area. It's not base since then, it's just melted straight up 100% out of the base. Added to it again. I've added to it on this break here, so you know, do your own research in that. The way I've done that is I've taken it as a separate, you know, it's part of the same trade. I've got that core position, what's got the full position running, and I've just added another trade what I can micromanage in my own way of doing things. Yeah, if I micromanage it and I blow it, that's my own fault. But there's, you know, basically I'm long and I'm wrong below here somewhere. I always give them space, not trying to squeeze the life out of these things. Account for the gap risk first. So, you know, it could fall 25% and it would just be a paper cut for me. So I'm riding that one. Hopefully this one just keeps grinding on This is better action, actually, the slow grinding action. When you get the sharp pops, they tend to, come back in, do a bit more volatile back and fill. This thing here is just really low beta and low beta pullbacks, as the sector tends to be. Always remember how sectors trend. If you're interested in that, go and have a look at the ShareScope tutorials on the ShareScope site. So yeah, sectors, can be high beta, medium beta, low beta, and this is kind of low to medium. So you've got to pick the high beta stocks in the low beta sector, the ones that really, low float, small cap. That's how you're going to get that. That's how you're going to get, squeeze more juice out of a pretty boring area. So happy days, that one's working well. I won't curse it anymore. SUR. So everything I've just said about SRC, I've also got that running in SUR as well. So that's another of mine. We've been holding it for quite a while now. It's a good winner. Do your own research and all that. Already got my position. LIT, normal pullback area. Not my favourite area really. It's not something I'm that keen on, sector. But same. Zone of interest. This is a deeper pullback, but a normal pullback. It is what it is. Doesn't look like anything. It looks like a pretty solid tick back up in the pre-tax on that one. Acceleration. Well, tick back up in the earnings. And 34, 38, 50, acceleration in the turnover by the looks of it. I'm talking about lit. Moving on. COG. Stage 1, Stage 2, Stage 3, Stage 4. If you're not in this now, I see it's got swing point. I didn't mention it in the outside up because it's already running. Anyone who trades similar sort of to my methodology will be riding this with a full position, just trailing that stop. Where are you in the trend? You've got to know. You don't want to see all these early bases and then want to get on board late. Is the message. What's the message? That's the message. You chase your die. EBQ. That's a recovery as well, EBQ. So it won't tick high on my register. Blackbird, the bird is the word. One thing you'll come to realise about the way I trade is finding stocks what have got that steady, aggressive first, and also steady growth is pretty good. But just finding those stocks what trade nice action lets you position size. Percent returns on a stock mean absolutely nothing. Say you return 200% on a stock, but you've got a 1% position because it's so volatile. And then say you return 100% on another stock, but you've got a 3% position. In reality, I want a 6 to 8% position, in a really nice stock. The perfect world I'm talking. In reality, between 4 and 6% on your early entries and building it, adding to it and building it into a core position with a big percent cushion in a nice, steady, stair-stepping, good action growth stock, what still ticks the growth screen, is where you want the bulk of your money. Who gives us, who gives a flying F at how many percent you make in that micro cap? What you've got 1% of your portfolio in. It doesn't mean a thing. It doesn't mean a thing. It's how much, if you've got 10% of your, you're running 10% and you've got a really good profit cushion, or 8% and a really good profit cushion, and it's in a steady grinding higher stock, what doesn't have that horrible volatility effect on the portfolio, I'll tell you what, that is the nicest place to be. You know, you've got to work in R ratios. Stop looking at percent. Everyone quotes percent. Yes, I say how many percent out of this base, but in R multiples is where you get paid, how much you can get on that stock. So I'm always looking for those orderly consolidations, what let you, you know, get a meaningful position on. Nothing to do with being right, nothing to do with how many percent the stock makes. It's all about how much you get running in a trend. Where you buy, where you sell minus where you buy is the profit you make in R multiples. Okay.